Welcome back to the live session for this next session on NY. And after the previous session, successful trade, we are back on another live to start this session for the next move on gold as well as other pairs that we are looking at for an entry. And I believe you guys are ready for an entry. Welcome. Marcos, thanks for joining, and say yes, guys, or say why, or just write something when in the live chat you are here, so you know that all members are here. Then we can begin the analysis along with potential trade setup. And gold is currently in a trend. Along with gold, also we'll be looking at dollar yen to see how the market is doing here. Let's see one by one potential trading opportunity in this market. And I hope I will be allowed in the group. Yes, absolutely. Anyone want to join the group today, you can visit the website and study. We can join today. We have few spots to take on mentorship. Later we'll be discussing on about the premium group that we are running, and where also I do share all the trade that I'm opening. Before we go to that, we are looking at the current market structure on the lower time frame. That looking at from the 4-hour chart, that you can see the price has created that bullish impulse. We might be able to see a potential trend reversal. Do you think so? Let me know in the live chat, guys, if you think so. Looking at the daily price action here on gold, you can see the market has dropped to that daily support level that you can see. And as the market has dropped to that daily support level in that area, this is the daily market that you have seen. In that daily price action, there was a breakup structure that you can see the market has dropped back below to this previous swing low here, which is significant breakup structure, overextended below to this weekly 38 61 point or 50%. Let's look at the Fibonacci from the weekly. The market reached to 50% from 38.2 to 50%, and now pushing back to the upside. Now, one very important price action pattern that we can look at here. This is the most crucial part, guys, and I really want you to pay attention here. That will change you look at the market now. If you look at the weekly open, how did you saw how the market open? You see the market didn't test the weekly high. That means because without retesting the gap open, if you look at MT4, you can see the gap. That gap has not been properly tested yet on gold. And because the market is getting the rejection again from that level now, the potential for this price to cross that high and then going back to retest this weekly high is very higher. So therefore, looking at the 4-hour chart here, that if you look at from the intraday perspective, this is the 4-hour price action where an inverted head and shoulder can be spotted. And with that inverted head and shoulder, the market, we can see the price slowly building that momentum back to the upside here in that area. So this is where there is a current resistance line in this market, and in that resistance the price approaching that key level, which is key level of resistance. And because the market is in this key level, we can expect now for another wave of bounce. At the same time, 4-hour candle, if you look at the previous session, was pretty bullish. Now FOMC coming later today, we can expect a very good move in the market, and already we have seen that move. We have taken the trade. You guys have experienced the previous trade with me in the live session. Say yes if you have seen or taken the trade was a massive one. Now want to look for something similar. If you enjoy the live session with me, make sure you like this stream and also get ready for potential trade setup. And also don't forget to subscribe, as in this live session we will be looking for the next entry coming up. Now I'm looking at, we are at 4-hour chart. Looking at the 1 hour, there is a significant bullish impulse in that lower time frame that you can see. 1 hour perspective, every candle is bullish, and it's a very stronger bullish price action here on gold. And we are looking at this level dropping down the 1 hour support level, breaking below in that direction is where the next entry. The market in a consolidation on the lower time frame means that potentially another trading opportunity coming here in that market. Welcome back to this live session. Now the way I'm dropping slowly to the lower time frame, going back to the 15-minute chart here, and that's where, if you look at here, you can see series of lower high, a curved structure, and that curved structure could break that low here and then potentially to continue to trend back up here in that market on gold. Now I'm looking at again 5-minute chart and the lower time frame here for this potential break above, and this low that we can see the current support level. If we look at the 1 hour back to back, two important support that we can see the market is approaching in that area. And with that two important support level, what we could see the market to break that low, right, and then to trend back up again in the major direction. And I'm dropping now 1-minute chart. That's where the trading opportunity. So going back to the calendar to see how the later today, what we can expect in the market from in terms of schedule coming. So starting later today, we will be looking at the CAD news, 4 of them, right? So CAD will also make, there will be volatility on dollar as well, and coming up later FOMC. So what is on the list here? So there are some low impact news, but that is what we are looking at the moment to see the technical aspect in the market, how this upcoming rate FOMC impacting the market. So the best thing that to trade with FOMC or NFP is the volatility. This is what we need as a trader, right? Exact the rate decision or any other factors, how that will impact the market, we'll see after the news. There are two things. One is before the news, one is after the news. Now, before the news more often is meet with higher volatility. Higher volatility means that there is trend. And when there is a trend, it's a predictable more often based on the trend. And that's what we have seen in the previous session. If you look at, we have opened a position from here, it straight bounce off that level, respecting this trend line, and we discussed that one in our previous session as well from this support level. Now, as the market is approaching that level, as the market is moving towards that zone, it's now on a pullback. 1 hour chart is on a pullback and expecting that the market to retest and then potentially to drop further back below, then go back up. 15-minute 20 EMA also could be retested, And looking at the 1 minute chart again, here it is still downtrend. How far it's gonna drop will determine how much we'll see that again bounce from that level. Greeting. Technical analysis may not work today due to interest rate decision in the evening. Okay, so that's a vitally important point. The technical analysis may not do or work out because of the technical analysis coming later this evening, fundamental news coming this evening. Okay, how do you interpret that? Let's understand the relationship between technical and the fundamental. Now, let me tell you guys, this is a very important point to understand. If you are trading for some time, definitely will help you to absolutely change the way you look at the market. The first of all, keep in mind that there is a relationship always between technical and the fundamental. So the market will never move randomly. Okay, so the market will move in a manner. So for example, without knowing anything, without knowing any news, like any technical, what is the interest rate current, and what the interest rate will come next month, what was the forecast previous months, what's gonna happen next week, without having any information, if you look at the market, you will find that the market is in an ordered manner. That means there is a language of the market. What is the language of the market? The language of the market like this. Okay, so this is a fundamental language of the market. Or you see that like this, and then breakdown, retest, continuation back below. Okay, so these are some the fundamental way that the market move. Fundamental means not fundamental means like always the market move that way, regardless of any news, any rate decision. Either there is a rate decision or no, either there will be increased or decreased, it is regardless of anything, the market will do always like that. That's how the market this is how the market is written. It's a language of the market. So then how do you have the relationship with this news coming, that means rate decision and all of that? So those fundamental accelerate this movement. So the role play this fundamental, that rate decision or any other decision is basically accelerate this market movement. That means volatility. For example, let's say there is no rate decision, postponed, and there is nothing for the next 1 month. There's no rate decision, nothing, no information. Then what you'll see that the market will do like this. Okay, like that means it's not going anywhere. It's gonna move in a sideways manner. But as soon as there is a rate decision, it's gonna have clean breakout, breakout, pullback, boom, big move coming down. So the market will move in that manner, but those important fundamental news will accelerate the movement or the rate of movement. So rate of movement is there is always a time factor involved. If you closely look at, you will see that the time is very important. For example, how fast the price is moving. Have you ever realized that? No one pay attention, right? We only look at the candle, pin bar, but have you ever realized that how fast the price is going up and down, right? It's like a spring moving up and down. So the rate of change of price depends on these fundamental factors, because based on how fast the order is being placed and order is being closed, that means how the traders are quickly opening and closing their position will determine by this volatility. And that is where the important to look at how those factors will play the roles. I believe that you guys understood it. Now, then as FOMC, so during the FOMC, you still need to know the technical analysis. You need still need to know the how to trade entry by technical aspect. But there is a very important factor with the fundamental is that during that announcement, the market moves randomly. That means you will see that it will break from the trend line. It will go up and down during that period. That means, let's say 5 o'clock, there is a news. So you'll see that probably 5 o'clock, the market will boom, will go in one direction, come back again, will go the other direction. So it doesn't maintain the market structure. Other than that, it's always a good idea is to wait for this kind of volatility before you look at the entry. That being said, now we're looking at the 1 hour perspective. After the previous session's massive bounce back to the upside, now the market is here in that area. If you look at where the price action is with this movement, now coming down for a pullback to this key support area. And with that key support area, if you look at the 4 hour chart, the market is dropping back below here, and with that drop down, that expecting the price to break that low and then to revert back again in the direction of the trend. So this is the zone that we are looking at this market. This is the zone we're looking at to break that important support area for us to enter the market. Do you think they affect the price action? How about speculative bets being placed now? Those who are trading based on every traders uses support resistance. No one is gonna trade randomly, because for the bigger volume, the smart money trader or the institutional trader, when they place the order, they place not only based on the fundamental. They must consider the trend. They consider where in relation to the daily, weekly, monthly, and the lower time frame the price is at what level, and based on that all the orders is being placed. I don't think they affect the price action. They definitely affect the price action is a representation of the buyers and sellers activities in the market. So it is always important to look at that the price action. Okay. And as a short-term trader, so if you look at, we are day trader, right? And for the day trader, interest rate decision, if there's interest rate cut, then for example dollar getting weaker, so dollar might start a downtrend, right, from the weekly or monthly. And in that case, as a short-term trader, we're gonna sell on the lower time frame over and over again whenever the market is trending. So how it works, let's say there is a dollar, there is interest rate cut, okay, a big cut. So that cut will weaken the dollar, because anytime the cut will always weaken the dollar because of the inflation increased. Now, when there is an inflation increased, dollar will be weaker. That's the rule of thumb. Interest rate cut means that there will be more borrowing from the bank. The bank will have more capacity to borrow. So when there is a more borrowing, that means people will have more purchasing power, especially land, property, all of them. And when there will be more borrowing, people will have more money to spend, and the price of goods will increase. And to borrow, where the money will come from, the government need to print more dollar. So when there will be more printing, there will be devaluation of dollar index, right? So that means dollar will fall in value. So you'll see dollar will become bearish. Now, when you see there is a rate cut, the dollar started to drop from the weekly. If you look at now, it's not gonna, it will never drop like that. You see, it might drop in 2000, I think 13. There was a big market crash happens. Sometime it happens. It's very rarely. Otherwise, the market will, when it start to drop, it's gonna drop, pull back, and a drop, pull back. So that is technical. Now, when it is dropping, pull back, which is technical, and that for entry of those move, we need to look at the trend. We need to look at the technical, and there is always a relationship between that. So this is what we need to look at as a trader, short-term trader, that the trend. Now, when the market is trending, what we are looking at, when the market is trending, we are looking at the entry from the trend, right? We are looking at the entry from the trend, and that is where we are as a trader, short-term entry from the aspect of the market when it is changing its direction based on the fundamental as well as the technical analysis. So now, if you look at again the 4 hour, we are looking at the FOMC. If you look at in the beginning of the trading week, we saw that there was a breakdown on gold, and now it's pushing back to the upside. What does that mean to you? You see, it's the opposite effect of DXY. That means, you see, dollar index must be bearish here. Let's look at, I even look, you see there is a rejection on dollar index, right? So that's gonna be mirroring on gold, because whenever dollar is getting weaker, gold will become appreciate, or gold will appreciate in value. Why? Because whenever there is an inflation, gold is gonna, that's why gold is so going high and high and high, because you can't print gold, right? You can print dollar, but you can't print gold. So gold become more safe haven for investors. They redistribute the holding because of the higher reliability and when there is an inflation. So that's why gold is going up, and we see that it's still in a downtrend. Now, current move on gold that early today we have seen, that bullish move is a signal of potential rejection or the lowering of dollar index pricing. If you look at the daily here, dollar index, you can see that today initially we see that bounced, but the price action, the way the market now creating the structure here on dollar index doesn't look very bullish here. Do you think DXY is going to be bullish? Share your thought and opinion here. But we see that gold might start again another bullish impulse because it left a very impressive imbalance. If you look at the daily along the way when it dropped, and it is gold in fact is a long-term bear market. Now in that strong bear market on gold, it's now on a significant pullback that we can see. Gold holding from 3893. Now gold is in a long-term trend is bullish, right, on gold, and recent break on gold was very important because this breakdown on gold has broken significantly two important swing low. If you look at the daily, this is one swing low here and there's another swing low here. So two break of this swing low, that means 1, 2, second break. The market closed this previous daily candle closed with a long wick here, passing that zone in that area. And because the market, if you look at the candle closed here above this area on gold, there is a possibility now for a trend continuation back here in that market. And there is a trend continuation that you can see in this market on gold that could make that price potentially bounce back above here. And because the market start to trend back up in that area on gold, we could see the price to continue to rise here to the upside to create a new higher high. There is an imbalance if you look at here in that market, and that could lead that market back above here, and there's some key resistance line that you can see was approaching these levels. And as there is an imbalance in this area, there is a bearish fair value gap that you can see on gold on the daily. We might see the market after a pullback to continue to rise here. So from the technical, as we discussed, that you can see gold currently on a bullish impulsive move back here in that area. Now we are seeing the market, if you look at, this is the 15 minutes price action approaching that support level, and that is where we will be able to find that entry in this market from this support level, getting a rejection back above. And as the price is approaching that support, expecting the price to test that low and then to continue to rise again back above here in that market. So in this area that we are looking at, as the market is approaching that low, coming back to this support here on the lower time frame, want to see the price to drop down here, want to see the market cross that low and then to return back up for another move. From the 4-hour chart here that you can see, the price is, because there is a bullish move back up, we would like to see the market to trend back down here, well below to this support, or even breaking further below here in that market. And here is also a support that the market now at, right? This is locally in a downtrend now at the moment if you look at the 1 minute chart, and that downtrend after this consolidation, you could see that it might drop even further below, but at any point you'll see the market is approaching or breaking again above here in that area, and that breakout could lead that market to continue to rise back in that zone here to create a new higher high. And that is what we're looking at in this market, for another bounce back to the upside. At the moment here we see locally the market is trending back down. So as the market is approaching this support, we are looking at to retest this 20 EMA. This is the 15 minutes market structure that you can see the market is in a clean downtrend here, and that's where we are looking at the price to drop back below to test that low and then to return again back in that area. Okay, so still we see that in that area, this is where the local time frame, that means lower time frame, is in a downtrend, and in the downtrend we see the price is approaching that support here and potentially breaking that low even further down here, and that drop here that you can see in this market potentially to come back below here to cross that low and then continue to trend back up in this area. Now this breakdown that you can see on the lower time frame could result in deeper drop, and that's what we are looking at. At some point when the price will start to reverse from that zone, that is what we are looking at for a bullish entry. Now it can be that you always, when you are trading, this is the hardest part as a trader, okay, you always need to see both direction, okay, both directional possibility. That means this candle can still continue to drop here like this, a big red candle crossing the previous one's low, but at the same time this candle could bounce off that level and continue to rise back up. So you always need to think both direction. And then how you'll find your entry based on the real-time price action confirmation, because the market will always will give you some kind of information that will show you that either this market is dropping down or preparing for another flight to the upside. So unless we see that, because we so far later or earlier we see there is a bullish impulse, now here will be biased to the upside here. So therefore any downtrend is just downtrend. We will be waiting for that move to continue to drop until we see the market prepared for an upside in that area. Welcome. Anyone wants to get into the premium group, you can join the current Telegram group where you can find more information more often to join the premium group, how you can get access to the premium academy. And also if you want to directly join today right now, you can also visit the website www.forextradingwizard.com for more updated education as well as regular. So once you visit the website, click join now button to become part of the trading community here. Now, what you can see in that area with this support level, the price slowly creating a pattern that could bring that market potentially to the upside here. I'm looking at the 1 hour price action. If you guys look at the candle close with a red candle. Now, this price action that you can see on the 1 hour, we could see that continuation as there is a doji and 1 hour bearish candle with a long wick on both direction. In those kind of price action, we could see the market to have a rejection again back here in that market. So that is where, if you look at the 4 hour here as well, the market on this support level and in the support level expecting the price to continue to rise back here to create a new higher high in this market. So that's where you can see the price action to show up an upside bias, and we are looking at this market to trend and return back again to the direction where there is a 15 minutes move here from this resistance line, a complete break below here to this support level, and from this support expecting the market to continue to trend and back above here to create a new higher high. This is the key resistance line here in that market. So as we see that the price action in that area is significantly rejecting from that level, we could see the market to continue to trend back up here to create a new higher high in that market. AUD USD, previous session you saw that AUD USD form a doji, and this session after crossing this low again, the price is potentially bouncing off that level here on Aussie dollar, and that is where that you can see from the intraday perspective from the 4 hour chart, this is a support level and where the market tested that low and could bounce off that level here. So the AUD USD may potentially continue to trend back here in that area. And if we look at the lower time frame where on gold, and as we see AUD USD and gold moves almost in the same direction as they are related instrument. So if you look at some related instrument, right, dollar yen, Gbpjpy almost nearly to related instrument, euro dollar, Gbpusd, they relate each other, gold, AUD USD relate each other, and previously it was very same direction. Now these days, due to the increased demand for gold, it changes little bit as with the weakness on dollar index. Can I hold my or close for buy AUD USD? I'm not sure at what level you have opened. It depends on what level you have opened the trade. Now here is what we are looking at, this market structure in that area. Ready for an entry? I'm looking at a possible entry opportunity here, as with the still there is no high impact news later today, as there is a FOMC at the end of the NY session, where that's where the biggest move coming. And due to the fact that tomorrow also there is a JPY news, followed by also there will be euro and dollar together. So at the moment, at this level, we need to see the smaller 15-minute candle that you can see, and those smaller 15-minute candle that you can see from here, right? These all are smaller 15-minute candles, and those are smaller 15-minute candle, and they are on the support level, could bounce off that area that you can see in this market. And breaking below here in that market, that you can see the price to test that low and then continue to trend back here in that market. Now current doji that you can see in this lower time frame is showing a potentially bullish move back here, and how the market structure is building. If you look at the lower time frame price action, quite a few 5 minutes smaller green candles, and in those areas where there is a smaller, there are smaller green candles here, that's where looking to see that there is a break above here, and it's not a bigger area that we can take pretty big move, but as there is a liquidity sweep here, the possibility for crossing that high is higher. So we are looking at a bounce of this level. Need more deeper pullback, guys. Here is this is a very stronger bullish trend that you have seen in the previous session. Now the market is heading back to the upside. Okay, this is a pretty stronger bullish impulse now in that area, and this is what we're looking at to see that the market prepared for another bullish impulse back to the upside. Dollar CAD, we still have nearly to 1.5 an hour for the CAD news to come up. So give me a little bit of light on dollar CAD. So the weakness on dollar, that you can see dollar CAD is showing up to be downside here, bearish. So dollar CAD is currently in a downtrend. From the daily, that you can see the price so far after the market open from this high here, the price has dropped back below here on dollar CAD, and could see that potentially to drop further downside here on dollar CAD, and could see the market to drop back below to this key support level here on this market. So dollar CAD is currently in a downtrend here. You keep eye on that. While you can see gold has just broken out of that structure after multiple liquidity sweep, the price has managed to bounce off that level, and because the market has managed to bounce off that level here on gold, you could see the price to potentially continue to trend back to the upside here in that market with a bullish impulse here, bullish engulfer formation. and we are looking at now potentially bullish setup here as the market is showing that the price action to be potentially remain upside on gold. We'll be back in just a matter of a moment. My apology, guys. So we have back on track here. So we can see the market in that area. This is where there is a, if we look at the 4-hour chart, there is a support here in that area, and from that support here the market has got that rejection back again in this area. So this is a key support level. The market has tested that support, the previous resistance, which is turning support here, and that resistance turn support, that expecting the market to return back again to the upside here in that market. So looking at that zone here, this is where there is a previous support area. The market is showing up in this area. So looking at that, there is a key level that we are looking. Therefore, from the lower time frame price action, from the 15 minutes chart, from this high here, the drop back below to this support level, and with that support retest, expecting the market to trend here, that continue to drop back to create a new higher high in that area. Now, as FOMC coming later today, we are looking to enter in the direction of the major trend, and that is where looking to see the market to potentially give us an entry opportunity from that area where the price action is having welcome back to this live session. So you can see the market has tested this support and getting the reaction back above. This is where you are looking at an entry opportunity here in that market. And because the market is in that trend, we are looking at the potentially upside bias in that area. This is where we are looking for a possible entry. If we look at the market structure on the lower time frame here, the market structure is showing up to be significantly bullish from the long-term picture. And as the market structure is bullish, as soon as we find that suitable entry, now as the market, we can see there is a breakup structure again on the lower time frame, and 4-hour chart here, that this is showing up to be significantly bullish. And in that bull market, if we look at the bigger picture, the bull market is where the price action maintaining that uptrending market structure here in this area. And as the market is on a trend, what we are looking at this price action, the price to potentially bounce off that level, and with a multiple smaller candle formation in this area, looking at the price action to bounce off that level. With a big move, if we look at the 15-minute chart here, that you can see there is a stronger bullish impulse followed by few consolidation pattern here in that area. expecting the market to trend back up to create a new higher high in this area. And as the market trend is up here, as soon as we are looking to see this area is where there is a high area of value, and lower time frame price action is bullish, 30 minutes price action closing as a bull candle, 15 minutes also showing up to be bullish. We can see there is a sideways market here, and in the sideways market, expecting the market to trend back down and then to create a new lower low here in that area. Looking at long wick rejection here, that is where the market is approaching this level here, that expecting the price to drop down here back to this support level where there is a high area of value, and with that support level expecting the market to trend back down, breaking that low here, potentially to continue to trend back up to create a new higher high in that market. Welcome back to the live session. Ready for an entry? As you can see, the market here creating series of lower high with a dynamic resistance formation in this market. And with this dynamic resistance formation here, there is a key level that you can see the price has created, and with this key level where there is a high area of value, and the market is approaching that key level, where looking at this market to break that high and then potentially to create a new higher high in this market. And with a liquidity sweep in that area, that you can see the market from that support level here, the price action, we can see there is a liquidity grab, pretty stronger liquidity grab, expecting the market to bounce off that level as if the market is trending in that area here. And if this is a trend here that you can see moving up, and with the continuation of that uptrend, we can look into entry from the lower time frame. Now 1 hour candle closing with a bullish, potential bullish price action, and if this is creating that bullish market structure, would like to place a pending order in that area here, and with this pending order formation with a bullish impulse creating new higher high here in that area. And if we look at this level here on that zone, which is, we can place that buy stop once the market managed to break that high with a buy stop order formation in that area. We are looking at an entry to the upside to create a new higher high in that market. So we'll be placing a buy stop. If the market break that high here, we are on the bullish trade in this area. So buy stop formation here in this area. So placing a buy stop for a potential bounce of this level in this market. So place the buy stop on Xauusd for a potential upside here. If the market is breaking that high, creating a new higher high, we will be entering into this upside move. As FOMC coming, as we discussed previously, as FOMC coming, we are looking at this market for an upside momentum back above to the direction of the major trend. Breaking below, we will not be selling this market at the moment. We see there is a breakup structure and expecting the market to reject back again from this breakup structure to bounce off that level to create a new higher high in this market. Okay, so you can see there is a 1 hour candle close, and as soon as the candle close, there is a downside momentum. So we are not selling this market as it is a bull market. we place the pending order for a potential upside movement in this market, and that is where we are looking to see the price action to show up that this market is going to be bullish here in that area. So therefore, if we look at this lower time frame price action here from this high here, that there is a double top, and with the double top the market is breaking below, expecting the market to trend back down here to this support level here to create a new higher high in that market. Looking at that price action here, that the market is coming down, breaking that low, and then we can see the price is approaching that level where there is a high area of value. And this is a trend line. The price is now at this support level and breaking below here. If the market is, if you look at the 15 minutes, you can see it's a complete bounce. Now if the market is breaking further below, potentially breaking that low, we might be able to find an entry by market, but we are still waiting for that further downside in this market here. And in that case, if we enter by market, we'll be entering with a by market order in that area on gold. So breaking that low here from this high could bring that price back below to this lower time frame support level on gold, and that's where the market is coming to a key level of support that expecting the price to test and then potentially to return again back above to create a new higher high in that market. So the market in a key level, guys, we see that there is a 1 hour candle close. The market has dropped down here, which might bring that market back below and waiting for this price to potentially show up that level. And with that breakdown here, that the market is to retest and then return again back above. We see there is a straight drop down back below here to this support level in that area. And here is the long that you can see in this market. I'm going to open this trade by market for a potential upside here, closing that pending order back to the upside in this area on gold. And we'll explain later the reason behind the trade. I'm long on gold here from this level. We'll be explaining later why I'm opening. Welcome traders, and we are long on gold here as there is a single move back below, expecting that this market to bounce of this level to the upside to create a new higher high in this market. And as there is a 10 and 20 MA crossover here, we could see the price to bounce off that level to create a new higher high in that area. And this is where a straight drop back to this previous session's low from the lower time frame, and that drop back here with the previous session's low here, the market is on this key support level. And as there is a one single move back below, it's a long-term bull market. We are on long with the tightest stop loss. The stop loss here that I placed on this trade is only 70 pip in that area. And in the 70 pip stop loss, so our pending order is closed. We are on, the trade is active. Now, as the market is on this support level with this one bounce, drop back down with a single move, expecting that with this candle close here again, the price to return back above to the direction of the trend. We are running little profit here. Say yes in the live chat if you're running trade with me. If you are on this trade, say yes in the live chat. Candle close here on the lower time frame, and you can see some upside momentum has created in this area on gold. Ready to take this trade to the next level here. We can see from this support level that the market structure is showing up to be upside in that area. And from this support level, expecting the price to trend back up here for another potential flight back to the upside in this market. And here is, this is a key support level. And in that key support level, the market is on a trend. And because the market is on trend, we see there is a double bottom, expecting the market to potentially bounce off this level in that market. And this is where looking at this price to go ahead and create a new higher high in that market. From this support level, expecting the price to move back, we see some upside here. We want to take this trade to the next level. Currently 33 pip up, I'm on this trade. Are you guys running this trade with me? Welcome. How many of you are running this trade with me? This is the fourth trade on a row that you want to keep winning. Smash the like button now. Have you joined the Telegram? There is a free Telegram where you can find more updated information as well as the education that will change the way you look at the market. And in the Telegram link, you can find also the option to chat with the admin. Okay, if you wanna join the premium, keep eye on the free Telegram for promotions as well as post where you can more often have an opportunity directly to talk to the admin for more education joining the premium. And also directly you can join via the website, link below this video. Visit the website, you can find the link below this video. When you directly go to the website checkout, where you can directly access the premium group, where every trade that I'm sharing with entry, stop loss and take profit target, that will take you trading to the next level. Now at the moment we are at this level in this area on gold. We have opened this trade, right? And in that movement, that expecting the market to bounce off that level, creating a new higher high. That is what we are looking at, to take it to the next level, from this support to the upside here to 40 pip. Come on, there is a rejection again. Come on, you want to see that the market is having the trend. Now if it breaks below here, we might see that potentially a downtrend continuation. There's a news coming. Come on, there is a breakdown. Is this news here, or is a false breakdown? And still on the trade, holding on to that. Might be a false breakdown that might bring the price back up again. Sleep of the price section. That's where there's a pretty strong rejection, and $15 minutes close coming. This is a very unusual drop back below, and still on this one. So 15 minutes candle closed, and big 15 minutes red candle. Now this has crossed this low here. I'm still expecting that the price to bounce off this level. There is a significant break below, so we are looking at now potentially to create this as a false breakdown or reversal. If this is a bear candle with a stronger rejection, we might see complete reversal back below. If it reverses, then we might see a big drop back down here. This is a very crucial level of price action that we can see at the moment. So we are on the trade here. I'm still running. We are nearing at entry, and so to see what kind of market structure is building, we are just crossed that entry here. And if the market have entered into the profit zone, we may not run very long. We want to take a profit here because there's a break below, but we are in the profit area now. And to see that what the market structure is actually creating here, is this breaking out, or we could see that it's a false breakdown, the market prepared for another bounce back to the upside. Currently I'm running with this trade here. We have 23 pip up again, and anytime I will be closing, I will give a shout out to see that if we are running this trade here. If it reverses here, then we might see the market straight going back up. That's the main reason why we have opened the price in a very key level of support in that market. And but if it reverses, if it trends back down, we may not run very long. And we don't want to see it's breaking back below. Instead, you want to see that breaking up here. If it's breaking out here, 4025 level is another important level that you can see in that market, where the price to go ahead and hit that 4025 level is another important resistance line that you can see in this market. And with that bounce of that level, we will be on the trade as soon as we see the market has shown that pattern back above. Okay, if it is coming down, we might exit at any point in profit. I don't want to get it into the loss at any situation at this point here in this market. Okay, I'm going to exit with this trade, guys. I'm going to exit as there is a significant rejection that you can see potentially, and we will be re-entering as soon as we see that. It might draw back below. So it's a long wick candle formation here. Now the question is, the market is breaking out, or you could see that drop down here. I'm out with the trade. We want to see the price action again clearly before we enter the trade. And as this is, if we look at the market here, we see there is a series of lower high formation, and with this series of lower high, the market is coming down here back below where the price action has shown back down. And in that area that you are looking at this market to show up potential entry back below here in that market. So it might break below here. Now we could see the price either to break above. So we are not taking the trade now for further move. We are out with the trade. With the running profit, I'm out because it might try to break that low here in this lower time frame. If the price action showing up to be bullish, you will be going back again another entry. But at the moment, if you look at from here, the price is still can come back down back below here to this support level in that market. We got it out with few pip running profit, and we will be re-entering as soon as we see another entry opportunity. We'll be back in just a matter of few minutes. Waiting for another entry with a very smaller short break, coming back. So the market here in that area creating quite a few smaller doji, and because the market is creating this smaller doji in that area, we see there is a multiple liquidity sweep. This market structure that you can see could bounce off that level, or we could see that rejection back below, as there is an FOMC coming later today. We are expecting this market to potentially trend back up here, and we can re-enter again at any point in time. All right, so if you look at dollar CAD, also showing that bearish move, That means dollar getting weaker, which could bring gold to be upside here to remain bullish in that market. Ready for another move. Now looking at the 1 hour price action, that you can see there was a bullish move followed by one red back candle below in that area, and that 1 hour market structure that you can see in this market could be also the 30-minute candle closing with a pretty long red candle. Now the next candle closing opening on 30 minutes, because this is a pretty long bear candle, we might see the market again to respect this support and then to return again back above here in that market. So now the possibility here with the 30 minutes candle close for the market to bounce off that level is higher, as there is a big red candle with a long wick price action. That long wick represents a rejection from this lower price here. Therefore, any a bounce back to the upside is where you can look for again another entry. Now this moment here in that market, the price is showing to be, if you look at the lower time frame 5 minutes chart, has got rejection on the 1 minute as well, getting that rejection from this higher price. And that support test on the 1 minute, if you look at, could be a catalyst for again bouncing back here in that market. We are looking at this support level. We are looking at this market to bounce off that level. And that's why we are looking at this market to create a new higher high. There's a reaction back below in that support level that you can see the market is approaching that key support area, and pretty stronger break below in that market, that at that moment you can see the price has reached that key level, and that is where the market is having a rejection here from this higher price. 4-hour chart here that you can see, this is a bigger red candle. Now the market could drop well below, or you could see that there is a reaction back again above 30 minutes price action, that you can see the price has dropped back to this support level here, and the market in a very important support level here. From this level, we could see that the market to react back again to the upside to create a new higher high. We could see that, or continuation drop down here. If there is a stronger rejection from this low, we can look for again an entry opportunity. But if you want to see that market is truly rejected again back above, or we could see a complete drop, that means the trend continuation back below here. But as it is a very strongly bull market, I'm still biased to the upside for a move in that market. Once the market prepared for a bounce, that's where you can look at that entry in this market. This is a currently, we can see from here there is a break below. Now we might see that further downside continuation, or you could see anytime a reaction back above, as this is a, we have seen the previous session, pretty strong drop here in that market. Now looking at the 1 hour market structure from this high here, that price action that you can see, if you look at this drop back below to this support level here, is a key level. That's a very important price action that you can see in this market. And in that support level, that the price could potentially drop further down, or you might see the market to revert back again to the upside here. So you can see at this level from this zone, the market is showing a downtrend in that area. Now this downtrend here is could bring that market back below, as we discussed in our previous analysis as well. The market may come back well below to this support here again before it bounce off that area. So that is where we are looking at this price action from this level, the price to show up to be in the direction of the major trend. If we look at the daily price action here, that you can see from this support level, the market to return again back above. From the 4-hour chart here, that you can see the market to revert again back above here in that market. Tested a very important support level from the 4-hour chart, that you can see the market here, that where the price has dropped to that support. And from the daily, if we look at gold from the daily perspective, this is the daily move. So far there is a significant strong bullish. There could be, the market is currently on a bull market, as FOMC coming later, that has given a momentum, as if the DXY is getting bearish, that you can see gold definitely having a reflection back here. Now after cross of this high, the market has crossed this 20 EMA. There is a fair value gap that the market on the 4-hour, that you can see is trying to fill that fair value gap here in that area. And as the market is on this liquidity sweep here, if you look at here, you can see the price slowly building that momentum back, and trend continuation is what we want to see here in that market. And if you look at the 1-hour, and that 1-hour drop that you guys can see, it's important, because once this 1-hour candle closed, right, as a red bear candle or as a bear candle below, the next one could be an opportunity for us to go long. And as the market is structured, if you look at, it's creating series of higher high and higher low. Previous pending order has closed as the market already dropped back below this support level, and in this area at the moment the price action is showing up to be potentially if you look at, there is a doji here and it's a very important key support level. $15 candle closed, and as 1 hour candle close coming in few minutes. From the 1 hour perspective here, that is a big break below. And what I think that with this 1 hour candle close, we could be able to see a potential trend continuation here back above, and therefore any downside here is can give us a potential bullish opportunity later. So we'll be waiting to see a price action confirmation for a continuation back in this market. So getting some bullish reaction in this area here on the lower time frame with a doji. So 1 hour perspective here, the market is now, this is a complete break of support, and then the price has dropped to that support level, potentially to there's a possibility for an upside here in this market. This is what looking at this price action to bounce off this level to create a new higher high. Back to dojis here in that area, expecting it to bounce off that level to create a new higher high. We see there's quite a few dojis, and here looking at this market to be able to bounce off the level, the 5 minutes to back dojis, and that could be a potential reversal or could continue to back below. If it reversal here, then we might see the price to bounce off that level to create a new higher high here in that market. Awesome. There is rejection back above that you can see, and with the 1 hour close coming, if you guys look at it, you can see that 1 hour candle close in 9 minutes time, and would like to see that it's closing above here. If this candle closing above this key resistance line, we are on top of it. That means there is a possibility for a trend continuation back above here in that market. And that is where the price action showing a possible a reversal pattern formation here in that area. Are you going to ready for another entry? We might see now potential bullish trend continuation, that you can see this market is showing up. And in the meantime, traders, if you are enjoying the live session, then don't miss out to like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so that you're not missing any of the content that I'm posting every day. Now, 1 hour candle close is to look at, is essential to see the price action. We see there is a 4 hour candle close as well. Now, 4 hour candle close that you can see on gold, if this 4 hour candle that you can see is closing as a red bear candle, that where we might see the market to again reject back above, ready for a possible move here. I'm waiting to see the 1 hour candle close. If we see the 1 hour candle closing here in that area as a bull candle, we can look at here for potential entry. However, the 5 minutes candle is important. The lower time frame, if it is showing multiple rejection from the higher price, still could see that further downside even back below to this fair value gap. Until the candle close, we are on this to see how the market structure is creating here in this area. This is here in that area, the potentially to now with the 4 hour close, guys, I'm looking at possible entry shortly, and with a nearly to 80p stop loss here. We'll be opening another buy with 80p stop loss below this level here, a stop loss, and nearly to 90p, expecting the market to go ahead and hit that key resistance line again with a very tight stop loss. The stop loss is very important, guys. Without lot size calculator also, no trade is expected. This is the another trade that we are opening for gold. I'm also sharing the same trade in the premium group. So open buy, I open buy, and the TB target at, we see the market start to move back on the 1 hour candle close, expecting that this market to reject back again to the major direction of the trend. As there is FOMC coming, the market has gapped enough liquidity here. They're therefore expecting that potential trend continuation, and we see some upside bias here, and looking at another potential bullish trade in that area on gold. And we are currently in this area, the price to, if you look at here, you can see there's a 90 pip stop loss and some upside here, nearly to 40 pip move since we have opened the buy, and I'm on it. Are you guys with me? And now the area that you can see in that zone, what is the factor that we considered here? The previous trade that we have opened and this trade, there's a big difference between these two. If you look at here, you can see the market has extended below. The trade is based on the 1 hour price action here. If you look at it, you can see the market has broken back below, rejected now again. There's a candle close coming, as we discussed in this session, that we're expecting the market to go up and candle close above. Now we are up 55 pip with this movement and holding on to that for the market to go ahead and cross this high, moving up above to nearly to 100 pip. Can we take that? Absolutely. As long as we did the proper risk management, which is key. Anything can happen. The market still can reverse back again, but we are on it. We are looking to see that it's having the rejection back above, as 1 hour candle cross that level multiple times, expecting it to continue to trend before the 1 hour candle close in 3 minutes time. We will be taking this trade out of the market by closing it as soon as the price reach little higher here, because with the 1 hour candle close we might see again a stronger drop or bounce in any direction, and you want to solve this trade before the 1 hour candle close, as there might be again another pullback in this market. There is some rejection on the lower time frame. So the 1 hour candle close in 1 minute 18 seconds, and that is also the 4 hour candle close. If you look at, and this 4 hour candle close, if we see this is closing as a doji, maintaining an inverted head and shoulder, expecting it to trend back to the upside, and if it trend back up, we even can expect the market to cross this session's high, which is 4029. This is where I'm aiming at the market to reach that level. So we are holding on to that. I'm still holding on to that. We are near at entry with little profit running. But if the market is showing up that move, I'm not closing it with the 1 hour candle close. We are running profit, but would like to see the price to potentially bounce off that level. There is a possibility for an upside here. I've taken the risk management lower time frame trend continuation here, that you can see the possibility to return back again to the upside, breaking the trend line to create a new higher high in this market. At 4 hour candle closing with a pretty narrower red candle, expecting this market to trend continue back above here. So we are on up on this trade and wanting to see the market to cross that high, then to create a new higher high in this market. Running in profit at the moment, and which is 55 pip. I'm still holding on to that. Possibility for bounce is higher, so I'm still holding on to the trade, and we'll look into that to see the market to continue to rise back up. Can you write yes if you are running with me? Another winner. We are maintaining almost 100% win rate. This week only one trade that didn't work out. We have worked out all the other trade in our favor. Now at this point the market is trending and wanting to see the price to continue to rise back up to create a new higher high. Again, trying to break that low, and bullish trend continuation is still showing up to be upside, so we are on this. Simon, thank you very much and welcome back to the live session. In the meantime, did you like this stream? If you haven't liked, then I'd appreciate if you smash the like button to go to the nearly to the view. And also, if you haven't subscribed yet, you can do so. There is a lot to take from here. Join the Telegram. You can find link below this video for accessing the premium group from the free Telegram. There will be a promotion more often to join the premium where you can get access to that. So here is the price section that's showing up to be 72 pip up. Now in the premium group, every single day, all the trade that I'm sharing, including entry, stop loss, and take profit target, and every details of the trade strategy, education is the key to learn and grow as a trader. Right? It's very important that, guys, you focus on learning. Being a trader means that you are fully focused on your growth as a trader, catching that move back to the upside here. So we are up to nearly to 90 pip on this one. Still holding on to that as the market rejected back below from this support level, as we discussed in the beginning of the session. If the candle close above, we could see that bounce from that zone here in this market, and we are on it. Right, we are on it and it's moving in that direction. So you will be securing profit very soon for this move back to the upside, potentially from this level here. 110 pip nearly to up 111 pip on this trade, and that's a live trade, that's a real trade, and you guys can see that. Can you witness that big move that we are catching here? Nearly to 120 pip move back up. I'm going out with this. The price has reached that resistance line, 120 pip taken. Awesome. Taken, profit taken. I've taken. I'm sharing the trade now in the all the details of the trade in the premium group with the education and everything. Done. Profit taken. Did you enjoy the trade? It's the most important part, is to enjoy, learn, grow as a trader. That's where our main focus here. Moving back up in that direction, so it could continue to rise here as it grabbed that liquidity. Now, understanding the movement in the market by understanding when you can see that the first trade that you opened, as soon as you saw that there is a potential for rejection, we are out with the minimum profit. The next trade that I have opened, I have hold on to that for big move. Big move is the key, right? Big move is the key. So that being said, guys, it is an extremely enjoyable session with all of you, and later today FOMC coming, I will be sending every trade that I am opening in the premium group. Don't miss out any part of our academy. Join also the free Telegram, where you can find access of the many of the strategies that I am trading, and also promotion to join the premium group. That being said, thank you for joining here, and I'll see you again very soon trading live. Until that, stay well, stay happy. See you again in another session coming up shortly.